we're as optimistic about Bitcoin as we ever have been, but there are a few regulatory and tax uncertainties, and we had been waiting for the discount between GBTC and NAV to narrow. It was as high as 50% at one point last year when there was great uncertainty around all of the turmoil in crypto generally, and now it's single digit. And there are now other products out there that we can use to gain exposure to Bitcoin in this moment, and it's just a moment of uncertainty between now, we think, and January 8th to 10th, somewhere in that range, perhaps. But we, out of an abundance of caution, didn't want to take any risk.
During the final week of 2023, Cathie Wood and ARK Invest made a surprising move. They took a significant step by liquidating their entire Bitcoin position held in the Grayscale Bitcoin Trust, an investment exceeding $100 million. This decision raised eyebrows, especially considering their long-standing advocacy for Bitcoin, with ambitious price targets of $1.4 million by 2030. The unexpected sale, however, finds its rationale in the imminent arrival of Bitcoin exchange-traded funds. According to Bloomberg analyst Eric Balcunhaus, Cathie Wood strategically divested her Bitcoin holdings in anticipation of the approval of a spot Bitcoin ETF. ARK Invest, on the other hand, has a pending ETF application, suggesting that the funds from the Grayscale Trust sale might be directed toward initiating their own Bitcoin ETF. This strategic move aims to attract more investors to their specific ETF. In a recent interview, Cathie Wood explained the reasoning behind her decision to sell and shared her Bitcoin outlook for 2024. The video concludes with insights from Cathie Wood on why ARK Invest anticipates deflation in 2024 and how this expectation could positively impact innovation and the broader crypto market. Stay tuned for these valuable insights at the end of the video.
As I mentioned before, there are some tax and regulatory uncertainties still as part of this process. We don't know exactly who's going to be approved and whether they've met all the criteria that the SEC has put before us. We know we have, but we don't know if others, including GBTC, have. We just don't know. So again, out of an abundance of caution. And GBT's discount, again, it was as much as 50% relative to NAV. So not only have we enjoyed this year the run in Bitcoin itself, but we've had the nice closing of that discount. So it's been, double good news for us. Well, we think the probabilities have gone up because the SEC has been highly engaged compared to what was happening before. Before, it was just denying approval. And we just kept putting our filing in again, try, dogged and determined. And so here we are. We think we're first in line, and that's why there is this January 10th deadline. But we like the idea that the SEC has been so engaged, and it's not just with us, it's others as well. We think a number of funds could be approved at the same time. And they've been asking not only one set of questions, but follow-up questions. And again, that's a very good sign. The last few questions have been very technical and so more de rigueur, and you'd expect them to be asking these questions as we head toward an approval. Now, it's not 100% certain, and so we want to make that clear as well. This is the SEC, and we never know, what might happen along the way. We are very happy that a couple of things have happened. That this idea that interest rates were going to continue moving higher has been proven incorrect. And I think even the Fed, while there is that small possibility, even the Fed is now starting to talk about the other side of the interest rate move. And so I do believe all we've seen so far is a reaction to that macro phenomenon or judgment call. We went through our flagship strategy, and all of our strategies went through a very difficult time from February 21 through December of 22, as interest rates, first of all, were presumed to move up or forecasted to move up. And then when they did move up, so it was almost like a double discounting. And so we've seen the first installment of the correction there to the upside for our funds with this notion, and it's again the forecast that interest rates will come down. And we would presume that if they do come down, for the reasons we think they're going to come down, the most important one being deflation, then our funds will be in good shape, because we are our companies thrive on deflation. Technologically enabled innovation is deflationary. Well, we put up a chart in one of our In the Nose, which is a YouTube video that I do every month, Employment Friday. And in that chart, you will find a ratio. It's the metals to gold ratio. So metals price to gold price. And there has been an extremely tight correlation between that ratio and long-term interest rates. In October, we published it, or early November. And what you will see is that there was a very wide gap that had developed. The metals to gold ratio was near its low for the past 12, 15 years. And interest rates were at their highs, 5%. The correlation, if you just eyeballed that chart, the correlation suggested that rates should go to 2%. Now, maybe they won't go all the way to 2%, but we think that long-term interest rates are way above where they're going to end up because of deflation. Now that we've had this very nice run this year, we think the answer to that question is in the private markets. They're close. What's fascinating to us is that the public markets have been leading the private markets for the past 3 years. As our funds were falling in 21, private valuations were going to all-time highs, along with the NASDAQ. They were taking their cues, I suppose, from the NASDAQ. But real innovation, if you looked at our portfolios, was starting to revalue to the downside, and even more so in 2022. We are still seeing major down rounds taking place in the private markets, and I'm always surprised at this sort of thing, because you would think that the private markets lead the public markets. That has not been the case in the last few years.
Enter Cathie Wood, and the motive behind their strategic maneuver becomes evident. The decision to liquidate their entire Bitcoin holdings, valued at over $100 million, signifies a noteworthy shift in their investment approach. This bold move is especially surprising, considering ARK Invest's historical advocacy for Bitcoin, complete with price targets of $1.4 million by 2030, which has left many puzzled. However, Cathie Wood's explanation provides clarity, linking the decision to the anticipation of Bitcoin ETFs, specifically a spot Bitcoin ETF. This sheds light on the rationale behind their strategic pivot. By divesting and gearing up for an ETF launch, it becomes apparent that they hold a high level of confidence in the imminent approval of such financial instruments. Cathie's insights extend further, delving into the expected deflation forecasted for 2024. Her analysis of the bullish implications of this deflation for innovation and the crypto market adds a particularly noteworthy dimension to the entire strategic shift. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.